Hi everyone, it's Adam Coburn here at Low & Co. Thanks for checking in, and we are looking at the Wellington real estate data for the month of May 2025 versus the last couple of years. Folks, in summary, it seems Wellington values might be plateauing. Very early signs. We have seen falling values in the last 6 months or so. Wellington City in particular has been the standout bad performer. Some early signs that values are plateauing, and also some positive very early signs that we might see conditions for sellers improve in coming months, but it's early days yet, so it's not a trend yet. So message to sellers, new listings are finally falling. Could this lead to better conditions for those of you looking to sell? For buyers, there's still a huge amount of choice out there, so getting amongst it continues to be my message. So let's get into the detail. Median sale price, May 2025, $795 versus $785 a year ago in May 2024. Look, up 1%, down 1%, bouncing around. You can see there from the red line, the trend clearly has been going sideways since July 2022, roughly, so almost 3 years broadly going sideways. If you follow these videos, you know I don't place too much emphasis on the median sale price because it reflects the mix of properties sold, not just the underlying values. And of course, it's underlying values that we really want to watch the trend of. But the trend in the median sale price is still instructive. But let's look at the Real Estate Institute House Price Index, which is the best guide to underlying values. We'll start with the league tables here. And as you can see, Wellington has still fallen further since the peak than any other region in the country. So we're leading the league tables there in all the wrong ways. So that's just over 25% drop since the peak, which of course was late 2021. 3.5 years ago now. Auckland fallen just over 22%. The country overall just under 16%. So Wellington still has fallen the further than anywhere else. Over the last year, the story is the same. Wellington has dropped 3.1% versus 0.4% for Auckland, and a 0.1% uptick for the country overall. So Wellington also has fallen furthest than anywhere else over the last 12 months. And I'm afraid to say the same is true for the last 3 months also. 2.9% down for Wellington versus 2.2% in Auckland, and down 1.4% across the whole country. So unfortunately, Wellington is the standout bad performer in terms of the gross, the degree to which we've fallen from the peak over the last 1 year and over the last 3 years as well. So if you look there at the shape of the graph, you can see quite clearly, sort of mid to late-ish 2024, things were improving. You see the slope of the lines going upwards a bit, the orange line in particular, but then since late 2024, over the last roughly 5 or 6 months or so, values have been generally eroding. Over the last year, looking into the different territorial authorities in Wellington, so Porirua, Upper Hutt, Lower Hutt and Wellington City, every one of those territorial authorities has dropped to varying degrees over the last 12 months. Over the last 3 months, Porirua, the only one to gain, but a significant gain at 4%. All the other TAs have dropped, and Wellington City has dropped furthest at 4.2%. Over the last 1 month, and I don't normally look at the 1 month results, but because this looks like it potentially could be a bit of a turning situation, let's do that. The risk, of course, of looking at the 1 month result is you got smaller territorial authorities over a short period of time. It's a small data set, so highly variable. But nonetheless, look, Porirua, Upper Hutt and Lower Hutt all have grown by over 1% in the last month. That's the month of May. Wellington City still dropped by 0.6%. But my question here is this the first sign of a turnaround in fortunes for real estate values? Wellington City still the, I suppose, the laggard amongst them, according to this data at least, but let's see if this trend does continue. Changing now to a focus on Wellington City. As we say, look, it has been the standout bad performer. It's been the laggard amongst the whole in the whole region and the whole country. You can see there the shape of the graph. Wellington City compared to Wellington Region tends to be a bit more sawtooth, bigger, deeper drops, steeper rises, but the shape of things is broadly the same. Over the last 6 months, we've seen the values erode a little more than we've seen in the region. So 4.1% down over the last year, 4.2% down over the last 3 months, and 0.6% drop over the last 1 month. So let's look now at number of new listings. And this is an interesting story for those of you who are looking to sell or indeed maybe on the market now. And that is that 632 new listings in May versus 931 a year ago. So that's a massive drop compared to a year ago. And of course, new supply coming to the market is a critical data point to look at if you're thinking of selling or if you are selling, because the buyers, of course, are looking for the number of new listings coming on each week. That's the stuff that's really the lifeblood of the buyers, if you like. So if we're seeing a dropping off in new listings coming to the market, that means it's easier to compete for attention of the buyers. There's fewer listings to compete with, fewer new listings to compete with that month or that week, and so on. So look, potentially some early signs here that fortunes for sellers might indeed improve. It's still 38% ahead of where we were 2 years ago, but in May 2023 we were seeing quite low listing volumes, and that is what led to the improving market in May. So potentially early signs here for conditions for sellers improving, fingers crossed. So not only have we seen number of new listings dropping in May, but we're actually down below what is typical for May. So 632 in May versus what's typical over the last 10 years or so at 672. So again, positive news potentially coming for sellers. Number of sales, 699 in May versus 678 a year ago and 661 2 years ago. So again, a reasonably consistent theme here, folks. We have seen, and you can see it evidence in the red line there, which shows the 6-month moving average there, gradually, slowly increasing number of sales taking place over about the last 3 years. We dropped to completely anemic levels of sales throughout 2022 and through a bunch of 2023. Since then, it's been slowly improving. I mean, we were at levels sort of on average around the 500 per month mark, levels we haven't seen for many, many years. Typically, we would see 600 to 800. We're now, over the last 6 months or so, on average, into the very early sixes. So that is still low compared to what's normal. It's at the very low end of what we would consider to be a normal range, but at least it's into the normal range, and as I say, it's been a gradually improving metric over the last 3 years. So again, if that trend continues, this is positive news for sellers too. Although number of sales has been increasing gradually, we're still not quite in May up to the levels that we normally see in May, 699 versus what's normal or what's average at about 721. So still plenty of headroom in terms of number of sales taking place a month, in terms of room to grow there. How long does it take to sell? So it's back up to quite a long time, folks. 50 days. What's average for May is 40, so certainly quite a bit longer than that. If you look again at the red line showing the overall trend there, it has been over the last 18 months or so slowly taking longer. We seem to have plateaued over the last 6 months or so, but 50 is back to a long period of time. If we think back to the number of new listings coming on and the number of sales taking place, if the number of new listings continues to dry up and the number of sales continues to increase, albeit gradually, then I would expect this metric at duration to sell will start to head down in coming months. So indeed, we shall see. Inventory, we've got 15 weeks worth of supply on the market in May versus 14 weeks in both the previous Mays, 2024 and 2023. So pretty similar compared to 1 and 2 years ago. Again, look at the red line there. You can see the trend has been broadly going sideways over the last 6 months or so after a generally increasing trend over the previous 12 months. Interestingly, 15 weeks, which we saw in May, is exactly the long-term average. So on that basis, it's a balanced market. It sure doesn't feel like a balanced market though, and that quite possibly is because over the last 10 years, we've seen about 10 weeks worth of supply on the market. So compared to recent living memory, 15 weeks is indeed still quite a lot of stock, a large amount of inventory. Trade Me listings, still a lot of listings on Trade Me, 3,074 versus 2,848 a year ago and 2,253 2 years ago. So a bit more than a year ago, quite a lot more than 2 years ago. But again, if you look at the shape of the graphs there, the blue bar chart showing the monthly results, you can see over the last 4 months we have seen dropping numbers of gross supply on the market. Now that is typically the case as we head into winter. The new listings slow down seasonally, and so we start to see gross listing volumes sort of eroding away. On average, we've still got more supply than we've seen roughly for about 10 years, just by observing that red line there. And there you can see it in another format compared to the number of listings this month compared to the same time 12 months ago. Still more than we were 12 months ago, but not by very much. So in summary, folks, Wellington values are down over the last 12 months and 3 months, and especially the case for Wellington City, which really has been the laggard. New listings are down versus 12 months ago and down by quite a lot. So this is potentially good news coming in terms of potentially improving market conditions for sellers. Let's hope so for those of you who are sellers out there. Sales volumes continue to go up very slowly. It's gradual, but it is quite consistent, and again, that will eventually improve conditions for sellers. Also, duration to sell is back to quite long duration again at 50 days. I would expect that to come down if indeed we do see conditions continuing to improve for sellers. Inventory levels are exactly at normal long-term levels, but they still feel long compared to recent living memory over the last 10 years or so. Trade Me listings are up versus last June, but down seasonally, as is typically the case as we head into winter. So the message for sellers is that perhaps these fewer new listings and continuing increases in sales volumes, that will eventually lead to better selling conditions. But in the meantime, there is still a lot of supply to compete with. And for buyers, those of you who are buyers out there, there's still a ton of choice out there. So please continue to get in amongst it if indeed you are in the market. Big thanks as always to Real Estate Institute and to realestate.co.nz for the data I use here. Big thanks to you for checking in. And if you need any personalised advice, please reach out. It's Adam here at Loan Co. See you next month.